A very early good morning, everyone. Today is 12th of May 2016, almost about 12:43 a.m. in Kuwait, and this is Prince Messin Golds. I hope everyone's having a great trading week, and thank you for very much for your time to watch this video. Just keep in mind that this video is only for educational and demonstration purposes only. It is not supposed to be considered as a trading advice. So when you make a trading or financial decision, you trade at your own risk and discretion. So let's get quickly started. Now, like always, you're using a MetaTrader 4 platform, and the brokerage that I'm working with right now is AvaTrade. I'm not associated with them in any way. I'm only a referral broker to them and business introducer. Okay, as discussed, MetaTrader 4 program. It's the American crude oil, and why I prefer AvaTrade is the security funds they offer and a continuous crude oil CFD account and swap free accounts. Sorry, continuous crude oil CFD contracts. Now they welcome all kind of traders, people with small account sizes starting from $100 to 500 and 1,000 onwards. Now we are watching the crude oil market, the American crude oil, and the technical indicator right now for this strategy is a 200 moving average. I repeat, the technical indicator that will be used for this trading strategy is called 200 moving average, and the moving average calculation method is exponential, and it's applied to close. That's it. And the time frame that we will be using is the daily chart. Daily chart is the recommended time frame. I do not recommend a 4-hour chart at all. That's the second option if you're looking for multiple trades. And this is a very simple trading strategy. It's really stress-free, not so much headaches is involved. We're gonna use this example in 2 or 3 markets, but my preference is oil and gold market. And let's begin how to trade it. First of all, risk management. This is leverage trading. So this is how you calculate the lot size that you will use. How do you calculate the lot size? Here is the formula. Equity, which is your current cash, money in hand or cash value available to trade, multiply by 0.12344 4 zeros and 1. This will give you a lot size. Let's use it as a real-time example. So let's say I want to know what's the lot size for a $5,000 account. Lot size equals to $5,000 multiply by 0.12341 equals to 0.05 lot size. Okay, what does this lot size mean? Whenever a market will move from $45 to $46, it will be a 1% gain in your account, or if it goes against you, it will be 1% loss in your account. That's the risk management. Now, what's the trade management? Once you pull the trigger and you want to manage the trade, how can you do that? Here's how to manage your trade. When you take a position and it has gone let's say 2% to 5% in your favor, you should close 80% of your position and let the remaining float. Let 20% remaining trail as much as possible. That's one way to do it. Another way, you take 5% off position and close the trades. You take 5% of your profit, book them, and you exit the trade immediately. Okay, many ways to manage the trade. You can learn from experience, practice on demo, and see what suits you best. In some cases, in my case, I would take 5% to 10% and exit. Now, how to buy? We've discussed risk management right now. Now we're going to discuss the trade. We discussed trade management as the second part of the presentation. Third is how to pull the trigger, how to enter. And it is really very simple. Here, when you see a new green candle, will successfully close above the 200 technical why do I keep on saying technical? Above 200 exponential moving average, a close, you will take a buy trade with no questions asked at all. Okay, so here we took a buy trade, wasn't a success. So what we do, we exit. How do we exit? When you see a red candle that will successfully close below the 200 moving average, you will exit. You will completely exit and reverse the trade. You'll start short selling. Short selling, and if you short sell, for example, you took a buy trade here and it reversed on you, you lost about 174 points, which is 1.74%. But you short sell immediately, and when you short sell, the market went in your favor by 4%. You could have taken that profit or closed 80% of your position and let the remaining flow. So this way you've covered your loss and made some profit. Now the market goes again, an independent green candle. Okay, here again it's a loss, short sell again a loss, but see, you get a buy trade here. Almost 300 points loss, but here you recover everything, 500 points. So you gain 2%. Almost 2 to 3% is earned in 2 months, which is not really bad, and later on you can start compounding them. You get the idea? But look at here. Look at here. Imagine if you had this opportunity here. Here. A red candle opened almost here. Let's ignore the past data just for now, for the sake of education. And you see here is almost in 138 days a 557% move in your favor. See that? It goes almost like 60%, 70% in 1 year. It's not bad at all. And now you got the opportunity. Imagine if you just took 10%, only 10%, which could be like here, 10%, 10%, then you had to wait almost like 200 days, or more than 200 days, probably 1 year almost, to get a new trigger, which was here, a buy trade. So it's more of a long-term or medium-term trading strategy. And it pays really well. Trust me, in the long run, it will pay you very well. This is the crude oil market. Simple trading strategy, less headache. You don't need to stress a lot. You need to monitor trade every 23 hours. And yep, and that's how it is. Let's look at the gold market now. This is the gold daily chart. Here, let's look at the gold market. More of a sideways trading market. We have a green candle close independently, and imagine we take a buy trade here and it goes up 16%. About 1,642 points, which is of course 16.42%. And imagine you take 10%, it takes less than 73 days to get 10% made. Here's another example. A red candle close below the 200 moving average on the daily chart. It goes almost 10% in your favor and start pulling back. Here, it's a buy trade, but it goes only about 2.6%, then goes against us by 2%, and we reverse the trade. But long term, it does make money. Here's another example. A green candle, we reverse the trade with 1% loss and goes in the favor by 10 or 13%. Cool? So I hope the video helps. If you have any questions, feel free to leave your comments in the comment box below in the video. You can leave your comments. You can contact me via Skype, prince.mussin.goals. I'll leave my Skype address in the details description box of this video. And you can even WhatsApp me on +965 6612 1618. I'll repeat it again. +965, country code for Kuwait, 6612 1618. Thank you very much. And if you want to open a demo account or a live trading account, please click on the link below in this video, on EverTrade for the EverTrade website, and you can sign up for a live trading account, and you can contact me as well. Thank you very much. Have a great trading week, and bye for now.